happy to have you both on stage with me to talk about hard stuff, if you can say that. So, Julien Etaix, as she mentioned, you're Chief Investment Officer at Novum Partners, which is a multi-family office in Switzerland. And you used to work at Airbus Ventures, and that's important. I think we are going to talk about it.
Absolutely.
And then Andreas Klinger, you're the founder of Prototype. It's a solo GP fund. And I quote, you are investing in cool stuff, hard stuff, weird stuff in Europe.
Yeah.
I'm sure we're going to talk about it. And you're also known to be the co-initiator of the EU Inc., which is a very big topic in Europe right now. So, first of all, I might say we're not going to talk about AI, sorry, not so much in this session, but a little bit. But we're going to talk about hardware, and it's going to be very interesting. So, for a long time, you know, Europe and also, of course, the US, but Europe has been focused in software, in the SaaS, and now AI. But today, with the geopolitical context, with chip shortages and energy issues, everything is changing. It's changing the landscape. So, what really sparked this hard tech renaissance, which is the topic of our session? And is it a strategic shift, or is it more like a survival instinct for you?
Thank you, Charlie. So I think a beautiful first question. Survival instinct, I think, is still how I would characterize it, meaning that having a war at our doorsteps in Ukraine and several geopolitical tensions has brought new energy, new focus from the government, from the founders, from the corporations to look at defense, to look at industrialization. It's not a reindustrialization. It was already there. Europe is already an industrial continent that has a lot of qualities, but certainly a new focus.
Andreas?
I think the West, roughly in the 80s, did like one big mistake. I think it was related to too much cocaine or something like this. We outsourced most of our manufacturing industrial base to Asia with the assumption that this saves costs and with the misunderstanding that actually most of the research and innovation comes out of the manufacturing directly. And I think what we're seeing right now is a reorientation, because most of the West, the startups were like very software focused, as you mentioned. But Europe is an industrial hub, like we're the second largest manufacturing hub in the world. And from my point of view, hardware was always here. The main difference is now that as an investor, it's almost impossible to invest in software. Like, who is going to invest in a SaaS company if your direct competition now is no longer just Gmail and spreadsheets, but also like cloud code and like the person just building what they need on their own? And right now what we see in VC is that robotics especially is like the current thing where you see actually ways to protect investments. So where you actually see a defendability. And this is why I personally think there's this huge new wave towards hardware, industrial automation, defense, whatever you call it. And it's mainly out of these two factors.
Absolutely, and profits, frankly, the fact that China and Asia in general makes a little bit less sense now from a supply chain standpoint, because it's far, because the supply chain can be disrupted, because the salaries have increased also in China and Asia. Europe becomes competitive again almost by default, so that's a bit sad, but that's the first impulse. There is the geopolitical urgency, and there is capital. So I think the stars are aligning finally for this rebirth.
And then there's the other thing, that we are now living in a time where trade is no longer a guarantee for peace. And trade and technology and industry and everything else is also used as political leverage tool. So as a region, you need to rethink how you actually do global collaboration.
Correct.
About funding, you mentioned this a little bit, but funding hardware, it requires more patient capital. Do you think that European investors are ready to shift their mindset and accept these longer cycles or not?
I think I'm the last person that will say that VCs are patient or more patient or anything. I also think that the idea that hardware is more expensive is not true anymore. Like the most expensive startups are all software. They're all AI labs. It's no longer slower because you have completely different ways to prototype, manufacture, all this kind of stuff. It's no longer harder to scale because you can finance a lot through debt nowadays. So I think a lot of the core assumptions are different now. And also, in a lot of the fields around robotics and physical AI, you actually are no longer what I would call deep tech, where you have another 5 years of research, but it's more like frontier tech, where you already know it works in one field, and you apply it to a different one now. And that's very much VC ready. This is the perfect sweet spot for VC.
Julien?
No, I mean, here I'm managing and helping very large families from Europe and the US to allocate their capital. We're a multi-family office addressing centimillionaires, billionaires, multi-billionaires, so it's a very special segment of the family management business. There has been a shift. Clearly, most families allocate capital rationally, and thus, sorry to say, a lot of the capital was invested in the US, especially in private markets, that is driving most of the returns. In the recent 2 years, we've seen a shift. The war in Ukraine certainly helped to bring up a little bit of patriotism in the mind of a number of wealthy families, but also just the returns and just the performance from a rational standpoint, as well as the strength of the currency, makes it interesting to invest in Europe again. And what we've seen is that the investment themes are across the entire spectrum. Families tend to be a little bit more conservative than VC, so on average, they will still invest massively into suppliers of the aerospace and defense conundrum, so investing in a Belgian-based supplier of Airbus, investing in a space supplier based in Germany, etc., already profitable companies, but they're also investing more capital in startups through funds or directly alongside founders, especially if it relates to defense and military applications. Another unlock, frankly, recently has been the shift around ESG. ESG is still a very important topic for families, but now defense is okay. And defense was not okay before the war in Ukraine, for better or for worse. And so now, all of a sudden, it's almost ethical to invest in military equipment in Europe. It's almost patriotic. It is something that is perceived positively by the new generations especially. So people below the age of 35 in families have more and more influence. And this is also a big change. I would say 10 years ago, in the largest billion-plus families in Europe, members of the family below 45 years old would not have their opinion heard. And now more and more. And so because of that, or thanks to that, 30 years old, 35 years old really have an influence on how the capital of the family is oriented. It means crypto also has its success in Europe, but it also means defense and defense tech and industrial business in defense are receiving capital from this family.
Andreas, do you invest in defense startups?
Yes, but I think defense is one of those areas where I want specialized funds that take it very, very serious and bring actual competence, and not, I would say, hardware generalists, or in general, generalists that just invest because currently it's trendy. I have defense investments, a lot of them actually, but I don't think of us as a defense fund. I think of us as a hardware frontier tech fund.
You know, the transition from prototype to mass industrial production, of course, a big step, is difficult, we know it. So what are the main technical and industrial obstacles in Europe so a startup can, scale up its business?
I mean, I can take this one, and of course I will focus on aerospace and defense because this is an area I know better than others. Europe, for the time being, did not do the same mistake, and I'm sorry if you have a different opinion, but didn't do the same mistake as in AI, to try to regulate before success comes, even though we have some leaders of AI in Europe. In the military business, I think it's perfectly understood that you should not regulate, and you should let the best tech win, and you should let founders and the needs of the customers, i.e. the government, the militaries, not just in Europe, but also militaries from abroad, dictate their needs without being encumbered by regulation. And so for the time being, the European ecosystem thrives because of the lack of regulation around military equipment. And I think it should stay this way. I think we should protect ourselves from thinking that Europe should, for example, deliver ethical weapons or ethical defense tech, but rather let the best companies and the best tech win, and then decide if we should put some guardrail around that afterwards, once these equipments are being produced and already winning market share. That's the first thing. The second thing is around capital. The US is becoming extremely protective around its defense company. There is a framework called CFIUS, which prevents European investors from investing in American businesses. Despite Europe being an ally of the US, we can't invest in the most strategic assets. And the opposite isn't true. American capital can pour into very strategic assets in Europe, France being maybe the exception and sometimes being a bit stupid about it and preventing any dollar from getting into companies that would have deserved it. But I believe we should have a sort of a European-wide rule of accepting or not capital and defining the strategic sectors a little bit more clearly. We have beautiful companies in Germany, Austria, which are now mostly invested by American capital. And so it's then going to be a little bit difficult for them to address the European needs first. They may address American needs first. And so that's where I think the limit is about capital introduction in Europe for defense.
Andreas, you want to add something beside regulations, lack of capital?
For hardware skilling in Europe?
Yeah.
So we still have, like the main problem we have in Europe is a generational gap. Like the classic supply chain manufacturing in South Germany, Eastern Europe, Italy, and so on, is usually run by people close to retirement. And the typical people who are like coming up with new startups, new innovation, new companies are usually like way earlier, way younger. And we have almost like a gap in between here. And the second problem is we are not building up as many new companies in that space as needed compared to China, for example. So we also don't have like that pull from the market to bring like the new companies up as quickly as needed. So I think this is a structural issue that we need to find solutions with, because otherwise all of them will just sell to private equity or to China depending. And that's number one, like we need to like get our supply chain actually working. The second challenge is usually capital, but there's nowadays a lot of service providers that find way to do asset-backed lending, asset-backed financing for robotics or for hardware companies, so that you're actually able to scale without investing your VC dollars. You're able to scale production and so on and so on. So for example, to rent out your robots directly to the customer instead of selling them for 5-digit amounts of euros.
Mm-hmm.
And I want to talk about the big corporates. Do you think, Julien, that European corporates do the job? Do they work enough, collaborate with, these European hardware startups?
I can only speak about aerospace and a little bit about the automotive industry. In aerospace, honestly, I would be pretty positive. I don't have a lot of negative things to say about how Airbus, Safran, Thales, Rheinmetall, and then Renk, and a number of other large corporations in Europe are operating. They have made already huge progress in being able to collaborate with startups. In 2010, at Airbus, I remember, in order to capture a new supplier in the payment database, you had to capture their credit rating by S&P. If the company did not have a credit rating by S&P, the system would not even accept the new supplier to be captured in the system. So it was really a system where Airbus was only buying from very large companies, and then other large companies had to find a way to provide the product. Now Airbus is able to buy from startups. They are very agile about it. Thales as well, Safran as well as many German companies, like pure German companies, are a little bit behind, but they're progressing fast as well. So in terms of collaboration, I'm not too worried in the aerospace sector. In the military sector, it's still a bit new. And of course, in the military sector, they want proven tech, which startups have a hard time showing, yet the collaboration is progressing. From an investment standpoint, though, I have to say that the corporate venture arm tend to be extremely defensive in Europe. They tend to invest in startups that are already working, already collaborating with the corporation most of the time. You have a few exceptions in the US, which is also a little bit frustrating, right? Airbus is doing Airbus Ventures in the US. BMW does iVentures in the US. Mm-hmm. And the European version of BMW Ventures and Airbus Ventures works on a completely different software with very different rules, a lot less capital. So even the corporations, frankly, were pulling Europe the other way, just because, frankly, they saw that the opportunity was bigger and more interesting in the US. And you can't blame them. From a pure rational standpoint, it made sense. And they're still a little bit behind in allocating capital in an aggressive manner in Europe, also because the DNA of the European leaders is a bit different. So from startup investing, they're behind, but from collaborative and purchasing standpoint, they're at the right level.
And you mentioned BMW. That's funny because I don't know if you saw the news, the French news. I have to talk about it, of course, because I'm French. But Mistral just announced this morning a huge contract with BMW.
Absolutely.
And a lot of other industrial companies. So that's encouraging for us. Andrea, would you like to add something?
Can you repeat the question?
About the big corporation working with hardware startups.
Jesus Christ. I have a few negative experiences here, so I'm a little bit more careful. My personal take is, as a customer, yes. Everything else can be complicated. And the problem is, like, at what point becomes a customer a partner, at what point becomes a partner an investor. There can be nuanced discussion, let's say it this way.
Mm-hmm. And another question, but about exit, and it's linked to big companies, big corporates, because it's one of our weakness in Europe, the lack of exit. And is it more difficult to exit a startup when you are in a hardware industrial startup?
Interesting. Again, if I just look at aerospace and automotive, it is not really more difficult in Europe than in the US. Okay. And I know that can be surprising because in the US, Lockheed Martin doesn't buy startups, Raytheon doesn't buy startups, UTX doesn't buy startups, Boeing doesn't buy startups. So in fact, it's not too different. The exit market in the US is incredible in the software space, in the pharma space, in the oil and gas sector, and in a number of other areas. But when it comes to aerospace, their market is as stuck as Europe. So there is no real competitive edge to the US here. So either you're a successful defense and hardware business and you become a big profitable business because you have a lot of customers among the large corporations, or you become huge and big enough not to need an exit, such as an Anduril, Saronic, and many other big success. The typical exit when you're a Series B, Series C business doesn't really exist in the aerospace and defense world. So from a capital standpoint, you need to understand that you will probably have a sort of a soft landing in terms of growth, and then sell as a profitable business to a private equity fund as an exit, rather than a big IPO or a big Microsoft acquisition with an incredible premium over the last round. That's not the story that you should be ready for. The story should be a profitable landing or an hyper-growth trajectory which leaves the business private for longer.
I think the big disadvantage we have as an ecosystem is, like when people say exits, they think of buyers. I think the big disadvantage we actually have is the lack of a pan-European stock exchange. Mm-hmm. And that if you, as a startup in Europe, if you actually want to have a reasonably large IPO, you actually need to list in America right now, which is, as an ecosystem, unjustifiable. Like, that's one of the main things we need to fix as quickly as possible, because it completely invalidates almost any early-stage risk investment in these kind of companies if there is no IPO market. And the way I think of this is not so much like exit in the sense finally the investors can get out and the founders can leave. I think more this is the next stage you need to actually become a massive company that drives GDP of a region, builds whole supply chains, builds whole ecosystems. And you need that kind of public markets to actually make that happen.
Mm-hmm. So I wanted to talk a little bit about AI, as I warned you at the beginning of the session. But OpenAI, Anthropic, Gemini, they are all focused on LLMs, so the digital use cases. But don't you think that one day they will just go to the physical world and to go to industrial AI?
Yeah, no, they already are. And there is a beautiful company, unfortunately, in the US, which I'm following very closely. I'm an investor, and thus I'm biased. It's called Hadrian, Hadrin. It's really AI applied to the factory at the core. Mistral is frankly doing great progress in partnership with SAP and ASML to adapt its engine to the physical realities of SAP, which, as you know, SAP is really the operating engine of most automotive and aerospace companies here in Europe. So Mistral is moving, SAP is moving, and I think we will have a shot at becoming extremely relevant in physical AI in Europe. We have all the talents that we need, the engineering, and people really speaking both languages. Whereas in the US, the software and the aerospace and industrial worlds are like on two different planets. In Europe, you have a lot of people who speak both languages and they sit in the same building. And so we have a hotbed, in my opinion, of innovation for physical AI in Europe, i.e. at the intersection between robotics and actually creating products in the physical world.
Also, to think of like Gemini or OpenAI and all of these are just pure LLMs is a little bit, I think, soon outdated. Most of them are like now multimodal, like Gemini famously. And for example, everything that OpenAI did originally for video generation, they're now using for essentially robotic control through world models. And so it's very much overlapping by this point. And so all of the big AI labs are going fully into physical AI, fully into robotics. The next thing afterwards will be simulations and everything around that. And then afterwards you have science, medicine, and all of these aspects. And there is regularly this discussion if like LLMs are anyway a commodity and we don't need them and whatever. You need them because you need the things that come after. Because those teams, those ecosystems, those people, that know-how creates that thing that come after. This is no longer just LLMs. Like the way they think of it, like I invested in a company, first round, that's essentially an AGI lab. They think of multimodal, they think of physical AI as the path to AGI.
Absolutely, and you made me think about two companies that I'm really fond of. I'm not an investor this time. Here, Syntax. It's AI and software applied to the surgery room, so really helping surgeons and the surgery teams to be more effective, to have process, to learn from their mistakes, to analyze the surgeries, already predict what may fail in the patient after the surgery based on the analysis of what happens. And this is a German company that is exporting to the US extremely successfully their AI for the surgery rooms, so that's a European success. And another success in the medical sector is Owkin, O-W-K-I-N, which is applying AI to the lab and how to make R&D faster for the pharmaceutical industry, for drug discovery, and already automate phase 1, 2, 3 FDA approval with their software and their approaches. And that's also a European-based success. So again, AI applied to the physical world is not just aerospace and defense, it can be so many things. Yeah.
And just a small word about China, because we've been talking a lot about the US, but China is really good at robotics, electrical vehicles. I don't know if you've been traveling to China lately, but it's the future. So is it too late for us?
I think Europe is undisputed #1 at one thing, it's premature defeatism. And if we would put the same energy we put at like being #1 at defeatism into other stuff, we could literally win everything. One person. Because yes, China is accelerating a lot right now, but also because we put a lot of our investment there over the last decades, including the America and us. Most of the know-how there is strategic asset acquisitions from Europe early on. Nowadays, obviously, further ahead and further developed. What we need to do is actually bring that manufacturing back, because all of the R&D that you nowadays have in front of you, tech actually happens on the manufacturing floor. And to me, this is not like, can we do it or can we not do it? I don't think of myself as an optimist or a pessimist. I think of myself as a determinist. Like, we need to do it, period. Like, there is no other question. Even if we're #2, it doesn't matter. We need to do it, because out of that, you create the actual opportunity for whatever comes afterwards to emerge. And if you don't have it, you're a customer for hardware, you're a customer for software, maybe you're a customer for military, and at some point you have to question, like, how much can you buy versus actually sell anything? And then at that point, it's too late.
There is almost nothing I can add to what you've just said. Beautiful. The one thing I would say, Michael Chambales from JP Morgan, good friend of mine, published a white paper yesterday about the top 40 stocks of AI in China. And among these top 40 stocks, 30 of them are in the industrial AI space rather than software. So clearly, they already identified the fact that for them, the future may not be DeepSeek. It may be competitive, but probably will not be the best. But industrial AI is clearly something that they would like to focus on. What's interesting, though, is that they're a little bit more autarcic. They're a little bit more introvert right now, and they're a bit less trying to push their tech outside, but rather to be extremely independent to the US. And to me, that's an opportunity for Europe, because China is surprisingly not conquering the world with their tech, but rather staying inside for the time being. And so this leaves a few years, not that many, but a few years for Europe to also build its own ecosystem before there is competition from outside.
The other thing that they do very well is actually being comfortable creating environments of competition. So for example, they have now some of the largest EV car companies there, but those started as like roughly 500-600 random startups. And then like you had essentially Hunger Games, and now you have these massive companies. And to this point, like Cattle, like the largest battery company, still gets like $1 billion in funding from the government. You have like the EV companies that also like they're very comfortable having competitive environments, and then also being very comfortable putting more firepower behind local winners. And the interesting thing in China is it's very much regional. It's to some point like actually could be used as a boilerplate for Europe to some extent, because for example, Beijing alone, like the city, not the government, the city has a robotics fund of more than $1 billion per year, and like just to deploy for local robotics, to build local champions. And I think this kind of like being very, very comfortable creating hyper competitive environments, where it's basically Hunger Games, and then being also very confident to pick winners and get like support those winners so that they can actually globally dominate is very, very impressive.
Letting the winner win, right? And accepting failures for others.
Yeah. Thank you very much, Julien.
Thank you, Charlie.
Andreas, for coming to Panathēnea.
Thank you.
Thank you.